In this video, we'll discuss how you can start spread betting. There are a number of steps you'll need to take to get up and running. More importantly, there are pitfalls you need to watch out for too. Most of the steps for getting started can be done completely free, so you don't have to break the bank when starting out. One of the attractive reasons for setting up a spread betting account is spread betting gains are not taxable. However, please consult a tax specialist for up-to-date advice on this. Spread betting is legal in a number of countries. Examples include Ireland and the UK. It is currently not legal to spread bet in the United States. To actually start spread betting, you'll need to follow a number of steps. Step 1. A spread betting account. To get started, you'll need to find a reputable company to use. There are hundreds out there to choose from, so it can get confusing on which one to pick. When choosing a broker, you want to make sure they are FCA regulated or regulated by a similar body in your local country. FCA regulated means your money is protected even if the companies go bankrupt, which should give you some added peace of mind. Depending on where you are in the world, we recommend CMC markets and IG markets as our two favorite options. They are both regulated and have been around for many years. You'll find links to them in the description below. These brokers offer over 10,000 instruments you can trade, including stocks like Facebook, Twitter, Apple, Google and Netflix, commodities like Brent crude oil, gold, silver, corn and cotton, cryptocurrencies like Bitcoin and Ripple, indices like the DAX, the Nasdaq, and the Dow Jones, and multiple currencies in the forex market, including the dollar, the pound and the euro. If that's not enough, they also offer smaller cap stocks from markets around the world too. Secondly, and more importantly, these companies offer demo accounts. This simply means you can practice using their software and making spread bets in a simulated environment with a fake $10,000 account. We highly recommend you use this option before ever placing real money bets. Creating a demo account is completely free. It's much better to make all the mistakes on a fake money account while you're practicing. These companies allow you to place bets on the price of an instrument going up or the price of an instrument going down, otherwise known as shorting. Simply put, shorting is profiting if the price of an instrument goes down from the price you bet at. If you don't think these brokers meet your needs, a simple Google search for spread betting software spread betting brokers will provide you with many options to choose from. Just be sure to read the reviews and ensure they meet adequate regulation requirements. Step 2. Kapital. Now, don't panic, you will typically be able to get started with as little as £100 or €100, whichever currency you choose, although this small amount is not recommended. It's probably best to save up a little more money between £1,000 to £2,000 or euro. While you're saving, you can be practicing on a demo account at the same time. To place a bet in a spread betting account, you don't need to provide the full amount to make the bet. Instead, you'll need to provide margin for the bet, which typically ranges from 5 to 45% of the total value, depending on the instrument you trade. An example of this in action would be if you bought 200 shares of a company priced at $100. The total value of this bet would be the 200 shares multiplied by the price of $100, which equals $20,000. If the margin required on this instrument is 20%, it means we only need to have $4,000 of the $20,000 to place this bet, instead of the full $20,000. When betting on margin, it's very important you are aware of the risks involved, which leads us into Step 3. Step 3. Education. This is one of the most important steps when getting started with spread betting. You need to get the right education, otherwise you could lose all your money very fast, which we obviously don't want to happen. Now, there are many courses out there to choose from, and there are many people that would be happy to take your money. If you are a complete beginner, we recommend you check out the free video guides CMC Market offers. These will help with getting familiar with the platform. We'll leave a link to them in the description. Then, there's technical analysis. This is a method of reading the price chart of an instrument. You've most likely seen these stock price charts on the TV from time to time. There are plenty of free guides on Google and YouTube that explain technical analysis, and a simple search here on YouTube will guide you in the right direction. Alternatively, you can go to stockcharts.com and browse through their free articles and lessons on technical analysis, as they are quite helpful. If you want to spend a little money, you can pick up a great book, Technical Analysis of the Financial Markets by John Murphy. This will get you up to speed in it. Another part of the education process is fundamental analysis. Fundamental analysis helps you figure out the overall health of the company by reading the profit and loss statements, the balance sheets, cash flows and so on. This is how famous investor Warren Buffett picks stocks to buy, so you're in good company. Again, there are plenty of free lessons online to learn how to do fundamental analysis, from reading earning reports to balance sheets. But if you'd like to spend some money, the book Reading Financial Statements for Value Investing is a great starting point. Links to both books are in the description. Finally, with education, you'll also need to understand the risks involved. You'll need to understand placing stop losses on your bets, so you know exactly how much you'll lose if the bet isn't profitable. Risk management is one of the most important parts of spread betting, so it's crucial you practice managing your risk on the platform of your choice. As a reminder, you can do this with a demo account so you don't lose real money as you train. Step 4. A trading plan, otherwise known as trading strategy. You've probably heard of the quote, fail to plan, plan to fail. Well, it's important you make a trading plan and treat spread betting like a business. Once you get the right education, you'll be able to make a trading plan. Typically, a trading plan will include reasons you would buy an instrument, how much you are willing to lose on a bet, what your risk reward is on a bet, and so on. Having a trading plan will put you ahead of many others who just place bets without any particular reason. You can make a simple trading plan in a spreadsheet or write it into your journal. These rules will help guide your betting decisions and help provide some structure to what you are doing. Developing your own custom trading strategy will make more sense once you are familiar with technical and fundamental analysis. Also, as a warning, once you have some education, you'll typically see people trying to sell you their magic trading strategy that they claim will make you millions or over 100% per trade. These are scams and you should probably run a mile from them. It's also during this step that you might encounter a trading guru looking to sell you alerts or some secret that they claim nobody knows. Be careful here too, as a lot of these people selling alerts don't make money from trading, but instead make it from selling you the alerts. Step 5. Trade journaling. This is the final step for getting started in spread betting. This is another very important step. When you place bets, it's important to keep track of all the bets you placed, profit and loss statements, reasons for entries, exits, and so on. If you do not track your bets religiously, how will you improve? This is so important to do and should be a top priority once you've completed the other steps. You can simply write the bets into your journal or spreadsheet and keep track of them every month. Alternatively, you can spend some money and get journaling software like Edgewonk, which will provide large amounts of details on all the bets you've made. Links to Edgewonk are in the description. As a beginner though, you don't need this software, but as you make more bets, you might find it helps you improve. Having a journal will help you learn from mistakes and make you better overall. Whether you trade Bitcoin, stocks or commodities, having a journal will assist in tracking mistakes you're making so you can fix them. So, those are all 5 steps to take to get started with spread betting. Just simply follow this step by step, and you should be up and running in no time at all. The sign-up process for the brokers isn't that difficult and is completely free. After watching this, you should probably set up a free demo account on a platform of your choice, and just practice using it. You will make mistakes along the way and it's best to make them with fake money. The demo account can be set up in under 5 minutes. And also remember that betting on margin is extremely risky, and you should exercise caution when doing so. You should risk no more than 1 to 2% on any given bet. Hopefully, this video will help you get started on your spread betting journey. If you enjoyed the video, feel free to subscribe for more investing, betting, trading and personal finance explainers in the future.